I had a question recently on YouTube about what happens if you do a backtest and your backtest is profitable and all good and the results are fine. But when you get to trading live or demo after, your results are bad and not as good as your backtesting. What to do about it? And I want to answer this in this video today. What's up traders, welcome back to Bangkok in Thailand once again with the third wave of COVID. And today what I want to do is answer this question about backtesting. And the reason why you might do a backtest and the results might be awesome and really good, but when you get to trading live or demo after, the results are completely different from what they were in the backtest. I replied to this comment on YouTube before. I want to share the same thing with you that are gonna really help to kind of pinpoint what is the cause and the likely issue of your backtest being the same as your live or demo trading after. Okay, so the first one is that your sample size for your backtest or your live or demo trading is too small. If you look at 10 trades in either a backtest or in live trading, 10 trades isn't enough to conclude anything about any trading strategies. It's just not big enough, and you could have 10 losers in a row and then you say it's bad, but the strategy could be good long term. Over 100 trades, the results will be most likely different than your just 10 trades or something. So if you want to have a proper sample size, you got to backtest for at least like 50, ideally 100 trades, and that's manual. If you do automated, then do more, of course. Now, when you get to trading live, you want to do the same thing. About 50 trades, I would say 30 trades is a good start. 30 live trades, or 50, 100 is even better, to be able to get a good idea of what to expect with your strategy. Now, things could be different, of course. It might not be exactly the same, but it will give you a good idea of what to expect when you trade live in the market after. The second thing it could impact here is something I see all the time. It's backtesting done wrong and not done with taking the right trades in your backtest. When you get to backtesting, like the first couple of trades are good, you follow your plan, it's easy, but then you get to having some ideas on how you can make things better. Some people will let their ideas affect the strategy and how they take trades in the backtest, and of course that's not good. That's the worst thing ever. So if you take the wrong trades in the backtest, if you start to, even like you see a trade, then you're not sure, then you go back, then you take it again, and then you go back and you skip the trade, because you say, oh, that's the bad trade, I won't take it. Try to ask yourself why that happened, why you did that, and what was wrong with that trade. You can keep a log of these trades you avoided to make sure you don't take them when you go live, because these trades that you avoided when you did the backtest, maybe you'll take them when you go live, because maybe you won't think about why you have to avoid them when you go live. You'll be in the moment, you'll be stressed, you'll be having emotions and feelings, and that means that your trade might be not executed the same as your backtest. So a really good habit here is to do a list of the trades you avoided in your backtest. Write down all the trades and why, the reason why you avoided them, and those trades you took, go back, see them if they fit your criteria. And if they don't, then you have your issue. You didn't take the right trades when you were doing your backtest. The third reason why your backtest might be different from your live or demo trading is just because the market could be different. What if you backtested your strategy in like 2019, 2018, then you get to 2020 when you trade live, or even 2021, and the results are different. Of course, the market is crazier now, it's more volatile, there's more big moves. Some pairs are really low, not doing much. The range you had back in like 2015 compared to now is completely different. So a 50 pip stop loss now is much bigger than a 50 pip stop loss like 5 or 6 years ago. And that's a big difference. So you need to be able to understand that, and you need to check whether the current market could be impacting your strategy live right now. And you need to also understand when your strategy that you've backtested, that you are testing out now, works the best. Is it working best in sideways market? Is it working best in trending market? Is it working best when there's high volatility or low volatility? What's the best scenario for your strategy? And if now you're outside of that, then you can avoid trading it. You can stop your trading for that strategy, go with something else. Or you can try to go in other markets where your criteria for the best market are met in that market. So for example, someone who trades trends in Forex right now is gonna get screwed. But you could go into cryptos, and cryptos are trending a lot, so you could trade those instead. And of course, you have to do your testing there, but that could be a really good way to expand your edge and trade markets that fit your strategy and your edge. Fourth point here is that you manage your trades when you go live or demo too much, and you interfere with them, or you enter where you should not enter. So your execution live is wrong. Now, that happens a lot where people go live, where people in the backtest, they feel good, they take their trades, all is good, they take profit there super far, and they're happy about it. But when they go to trading live, that's not easy to do, right? That's something that you have to work on to be able to get there. And it's easy when you go live to trail your stop loss more, move your take profit more, adjust things more, manage your trades a lot more. And as you know, it can impact your performance by a lot. It could be making a big difference on whether you have a profit or a loss overall if you manage your trades a lot. Or if you have usually a 2-to-1 target, 2-to-1 reward to risk, and now you close the trade at 1-to-1 because you're stressed out, you want to close the trade early, then of course that will impact your trades, right? Or maybe you second guess yourself when you enter your trades. Usually you will enter like at the low, right? At the lowest point on the chart, or kind of. But now you're not sure, you're like, I should wait a little bit, then you enter too late. And that means that your reward to risk is inverted or it's different. So all these things could affect your performance when you get to trading live. You don't get this of course in backtesting because it's too easy to do. But we still have one more thing that we have to cover. And it is the fifth reason that you backtested something that was curve fitted, which means based on past data only, and that won't work in the market in the long term. Now this would be the case if, let's say, you trade something with like 5 or 6 different indicators. You have like all these rules, all these parameters to look at the chart and to analyze your trade. Now usually this doesn't work well long term. This can look really good in the backtest, but long term it just won't work. Like these algos you buy online for like $20 or something that are completely useless. They have like this crazy good performance of like 1,000% per year or something, and it's like super strong up curve, but they're just over fitted on past data. They're just curve fitted, so they fit the past data really well, but not the future data. Of course, that's because they put so many rules to make it really tight, taking not so many trades but making it like really profitable, but over the long term it just doesn't work. And so what you can do in that case is your strategy should be based on a specific framework. A framework where you have different parts that makes it in line with the market, how the market behaves, how the market moves. For example, you start with a bigger picture view of the market, then you go down to price action and go down even more to indicators and things like that. Now recently I've done a training on how to create your own trading strategy, how to validate it, and how to get to a point where you can trade it live in the market. All these steps are covered in training, and people loved it because we went through a lot of things. This training took a few hours to do completely, and people enjoyed it. So I'll leave a link below if you want to check it out, learn more about it. If you're looking for a step-by-step guide or someone to kind of bring you through every step of creating a strategy from scratch with your own rules, your own parameters, testing it properly, and being able to trade it live in the market and then scaling up to bigger amounts, then that training will be for sure for you. I'll leave a link below, you can check it out. If you have any question about it, you can comment below as well. I'll be happy to answer your questions. Subscribe if it's not done yet. Also, please share the video with other people you think that might benefit from it. It would be nice to have more people to see this video and come across these tips to be able to make their strategies better. So if you have any friends or people you know that could benefit from it, share it with them. And I'll catch you back here in the next video pretty soon.